Everyone, I'm back here with Mike. We're doing video 2 this week. We're going to be going into details about what really is Marble, the target market, and some other stuff. But first things first, Mike, how are you?
Hey, doing great. It's another wonderful day out here in Vancouver, and nice to be able to share our story with you.
Awesome, awesome. Yeah, I know. Very jealous of the weather in Vancouver and the amount of golfing that you've been having. But let's dive into, I guess. So, like, really, if you need to tell someone in 90 seconds of what is Marble, what would you say?
You know what? Marble is a company that helps individuals in the subprime or the underbanked market. I would say that's what we are. Our focus is helping individuals rebuild their credit.
Cool. Now, for people, I guess, that don't really understand, so you're helping people rebuild credit. Maybe go into a little bit of detail on the how now. How are you
Yeah,
helping people rebuild this
for
credit?
sure. Now, there's, I think I think there's more than enough uh, um, information that's out there through third parties. I mean, M&P, the Canadian economy. We're a highly leveraged society here in Canada. And we're probably one of the highest societies that have bank accounts. Everybody uses a bank account, most people in Canada. But we're close to $2 of debt for every $1 in GDP, in gross domestic product. So we're very highly leveraged. And not only a couple months ago, we were at about $1.70, but with the whole economic COVID financial turmoil that's transpired, we're close to $2 now of debt. So there are, and there are nearly a third of Canadian population, nearly 12 million, that are in the subprime or the underbanked market. What does that mean? Well, really, if you're in a highly leveraged society like we are, that means we all operate on credit. And so when does credit matter? Well, credit really only matters, and your credit score, your credit report, only matters when you have to go out and seek credit. I want to go get a cell phone. I'm renting an apartment. I want to buy a new car. I'm looking at, I'm looking at going buying some furniture. I'd like to buy my first home. So when you go out to seek credit, that's when your credit report is important. But the problem is by that time, it's too late. It's like, this is no different than your health. If you grow up being a chain smoker, drinking lots, the whole works, well, then all of a sudden, when you get to your, elder years and you either have a heart attack or you come down with cancer, the problem is by the time you get that notification, by the time that happens, it's too late. You've already, if you want to call it, poisoned your system. You can help, defer it a bit by all of a sudden stop smoking, exercising, doing that. But the damage is pretty well done. Well, it's the same with credit. If you don't take care of credit, it's not going to take care of you. If you don't understand what it means to make, regular payments on time, not to exceed or not to exceed more than 50% of the balance in outstanding on your credit card, because that actually affects your credit. Uh, and, and also, let's just say you don't have any credit. You don't have a credit card, you pay cash for everything. Well, you're probably in a worse credit reporting or credit score than someone that does have a credit card or someone that does have a loan with a bank, those type of things. So in the society that we're at, Marble's goal, Marble's mandate is to help those 12 million people go from the subprime and the underbanked, where they're, for them to establish credit, they have to pay a large or a higher interest rate than people that have good credit, or they can't even get credit because they are their credit report, credit score is poor. And so what Marble plans to do is use its financial technology, its data science, its products, its artificial intelligence, its machine learning in its products to help those individuals get back up into mainstream economy and be able to have a meaningful life for them and their family, where they're not robbing Peter to pay Paul. They can establish a credit, they can live within their means and enjoy life and not be financially stressed.
Yeah, and maybe for people that don't have a financial background, but keeping this investment focused, tell me what could be the difference of having another 50 points on your credit score in the long run for someone trying to buy a house or buy a car, right? Are we talking a couple dollars? Are we talking thousands of dollars? Maybe you want to kind of give some insight there.
Well, it all depends on the larger the ticket item, the more effect it's going to have on you. For example, if you went to go buy a $50,000 car, which is kind of a standard car, it's really nothing, too expensive and nothing too cheap with cars or anything. So if you have a difference of 50 basis points on your credit score, say you have a 650 instead of a 700, that could make the difference of an interest rate for your car loan of probably 3 or 4 points. And if you do 3 or 4 points interest rate on $50,000 over 4 or 5 years, that adds up to hundreds of, or thousands of dollars. We'll take that a step further. You want to buy a house, you put down your 5%, what you can afford, or 10%, or if you're one of the few Canadians, you can actually put down 20 or 25% on a house where you've got a mortgage for $300,000 to $400,000, but your credit score now doesn't meet the criteria to get a loan, get a mortgage at 3%, but you got to pay 6% or 7%. Well, on a few $100,000, that is a large expense, added expense to the individual. It makes the difference of, probably could make the difference of $100 in their payment. Well, if you take that over 15 years, which is a typical, or 25 years, a typical mortgage, that's a lot of money.
Yeah. No, I think that's good to give people the insight. Obviously even a couple points matters at the end of the day. And, I guess walk me through the next step. How does Marble find clients? And, I want you to keep in mind thinking about the next question is going to be, how does Marble make money? But if you wanted to kind of start, so there's a 12 million, person market, but are you looking for everyone in those 12 million people? What's kind of, where Marble is like, hey, this is the amount of people that we're looking at. Is it the top amount of percentage, top amount of people, and then kind of go into details, your target that you're looking for?
Yeah. You know what? The market is 12 million. Gee, would we like to access all 12 million? No. The practical answer is no, because there are some people that, abuse the system and aren't. But for us, like in any business strategy, you have to find a cost-effective solution. So for us, it's not, it's a combination of marketing to individuals, but it's also utilizing industry partners. So, and it's a typical funnel effect. You're going to have all of the people coming through the top of the funnel, and you're going to weed through them, and the ones that meet your criteria and don't, and the ones that make it through the bottom. But for us, we go to industry partners and we sign up partners to help us. So, there are numerous online sites like Easy Financial or Smarter Loans or Loans Canada or Canadian Counseling, Borrowwell, Credit Karma. There are all those sites where individuals go there to seek credit. So those individuals, when they go into those sites, looking for money, looking for a loan, they at that time are established to say they're either don't meet their criteria with regards to the credit score, or they're in an insolvency which is an automatic reject. They're either bankrupt, or they filed a bankruptcy, or they filed a consumer proposal. Well, those individuals that are rejected are our clients, are the ones that we're looking for. So rather than those industry partners just rejecting them and not being able to monetize them or not being able to help them, what we do is we enter into a partnership. We then integrate with their site. And so those individuals automatically, when they get rejected or turned down from them, get automatically passed over to us. So currently we have about 18 industry partners. We're working with a mortgage company now, Dominion Lending, for example, that are helping people get mortgages. So there's a person, let's just say John, goes to get a mortgage. So they do their credit report on him, they do their credit score and say, you know what, John, you only have 650. So the best I can get you is an 8% mortgage. But if you had a credit score of 700, I can get you a 3% mortgage. So what we do with them is they offer ScoreUp to them. ScoreUp is a prescriptive credit rebuilding software platform. When you put in all your information into that, it tells you that, you know, John, if you went and paid your Canadian Tire credit card on this date, and you paid $50 on your Esso credit card on that date, you can gain 30 points next month on your credit report. So they sign up for it, and then it's a prescriptive tool, as well as it says, do you know there is an error on your credit report that needs to get fixed? And when you fix it, you'll get an extra 20 points. So by doing that, then that customer in a couple months gets up to the 700, and then they can offer them a mortgage at a lot less of a price. So those are the type of clients that both that we can help on the ScoreUp product. It's the same with an individual goes to Easy Finance and they want to get a loan from them. They fill out the credit report, and all of a sudden they say, you're in a consumer proposal, it's a hard reject. They don't even pull a credit report on you. Well, that individual will all of a sudden get sent to us. We then can work with that individual. If they meet our criteria, we will pay out their consumer proposal, and we can get them back into mainstream banking in less than half the time than them staying in the consumer proposal government regulated program, which means that they can get back into mainstream banking in less than half the time, which the traditional method is about 8 years. We can do it in less than 4.
Wow.
So that's our goal. That's how we help people. We do it through our own marketing, but we really have been working with industry partners or people seeking credit, and also with the insolvency trustees. There's close to 2,000 insolvency trustees across Canada that help people restructure their debt. Those are the people that we try to track, and we try to help down the path in trying to rebuild their credit.
Interesting. Oh, it's all awesome. I think there's a lot of feel-good stories. I mean, really, you phrase it as helping people. I know you guys are. I know you're a for-profit business. We'll get to that in a second, but I think that's awesome. You know, we've talked before, on previous videos, that you're helping people that sometimes they had a life event. You know, they were sick, they had an accident, this happened, that happened, and it's not that they, are terrible people, or weren't paying attention. They just had something unfortunate happen. And those are kind of, the perfect customers you guys are looking for. I guess, we are talking, for profit. Tell me kind of how your guys' fees work. You guys are past some people, you're looking to get a million leads. That's incredible by the end of the year. You're past these million leads. Where's the fees in there when you guys finally say, hey, like this person meets the criteria? How do you guys charge? How does it work for someone who's not really too familiar with kind of credit?
Sure. No, and yeah, you're absolutely correct. I mean, our company is a for-profit company for sure, but the satisfaction every employee in Marble gets in the feedback they get from the customers they've been able to help and get back into, into mainstream banking or help them rebuild their credit is far and above, beyond, the profitability of the company, and taking care of them automatically takes care of the company. But in the society that we live in, there's a cost for rebuilding your credit. There is a cost for it. So for us offering a fast track loan, we make money because we charge them an interest rate. What we do though is, when they're in a consumer proposal, they've established a certain monthly payment that they can live with. We try to match that payment so there's not any more financial burden with them, but we extend the term of the loan so that so that the payment stays the same. Our interest rate on our loans range between 18.99 and 24.99. No different than what credit cards charge. With that, we do have an admin fee that we put onto them. So all of our loans stay under the high cost of credit with it. But because we can save them amount of time in being able to get back to mainstream credit in a shorter period of time, they can then move into mainstream banking and single-digit financing to take out our loans and save themselves money in the long run. So we make money on the interest rate that we charge people for the loans that we pay out for consumer proposals. On our Score Up product, it is a SaaS-based model, software as a service, so we charge a monthly fee. The monthly fees range anywhere between $49 and $99 a month. If they have a choice, they can either pay us for a yearly subscription or they can pay us month by month. People that really don't have the money and need to help rebuild their credit even faster, what we do is we offer them a loan to take out a subscription for a year. They make the loan payment. So not only does Score Up help them with prescriptive analysis and rebuilding their credit, but we report the loan to Equifax and TransUnion on a monthly basis, which helps them rebuild their credit even faster. So we have several models that we utilize, but currently the two products that we offer right now is the Score Up, which is a monthly subscription, or the Fast Track loan, which is interest rate bearing that we make our money.
Interesting. No, I think that's a good insight.